Hey everyone, and thank you so much for attending the Virtual Investor webinar. My name is Robin Holt. I'm the Chief Campaign Officer here at Virtual, and I'm joined by Matt, the co-founder of Virtual. I'm really thrilled, and I cannot thank everyone enough really for the support and all the excitement we've received around the raise so far. It's been an incredible experience, and I think one that really helps us relate to every single one of our clients going through this entire process ourselves. I really want to just explain the format for today before I hand over to Matt quickly to introduce himself. We're going to be running through an investor presentation, which Matt has got behind him. We're going to be opening up for a Q&A at the end, and we are going to stay online and answer everyone's questions, regardless of how long that takes. So Matt, I'm going to throw over to you quickly to introduce yourself and run through this presentation that we've got.
Brilliant. Thanks very much, Robbie. Yeah, it's a bit surreal having this meeting. I've kind of watched a lot of your webinars with other companies, and you always do an excellent job. So yeah, it's kind of a bit weird for me sitting on the other side of this, but yeah, excited and a real kind of moment for the industry and for ourselves as a business. Hello to everyone. I'm Matt Vitale, co-founder and MD of Virtual. Thank you for your interest in the offer so far. I've got a bit of a presentation, as Robbie mentioned, to take you through, just to kind of cover our achievements and traction and really how far the crowdsourced funding industry has come in Australia in a relatively short period of time, but also some of the opportunities that we see ahead of us, and the funding opportunity that we're communicating at the moment, and how you can be involved. But I'm going to canter through the presentation as quickly as possible, so we've got enough time for questions afterwards. So yes, if you do have questions, just kind of submit them to Robbie. Robbie will let you know exactly how to do that. He's much better at this than me, and we'll do our best to answer all of them.
I will just chime in and just say we're going to be using the Q&A feature. So for all questions, please do use that Q&A feature. I'm going to be picking these up as and when they come in. We will get to these if they're not answered already in the presentation, but we will absolutely cover exactly where you can find the answer for it, and we're going to be covering them. So Matt, I think that's perfect time for us to kick off with the presentation.
All right, sharing my screen. Hopefully this works. There we go. You can see that all right, Robbie?
I can see that perfectly.
Excellent. Look, just some legal and compliance things at the outset. So this is a presentation in anticipation of our intended crowdsourced funding offer, which is planned to open over the next couple of weeks. It's intended to be of a general nature, not intended to be financial advice. It does not include all of the information that investors will need to make a decision whether or not to invest in the offer when it is made. It is presented purely for information purposes only. And obviously, before making any investment decision, always consider the offer document when it's available and the general crowdsourced funding risk warning. So in terms of what we're going to cover in this presentation today, I'm just going to highlight some of the current themes that we're experiencing as a business, and more broadly, the crowdsourced funding industry. I'm going to provide a high-level overview of Virtual and our achievements to date, and then also explain a little bit about the Australian crowdsourced funding industry, its performance, the landscape, and kind of relate it to or explain some relativities to other markets around the world that have similar regimes to ours. I'm also going to talk about, at a really high level, Virtual's financial performance, the case for building out an ecosystem of products and services, a summary of Virtual's growth strategy, and some upcoming initiatives that support that growth strategy, specifically Virtual Trade and investor reporting. And then hopefully there's plenty of time for questions after we've got through all of that. So just in terms of the themes that, that we're dealing with as a business and observing as an industry, it's the growing importance of private capital and retail investors is a trend or theme that that is being experienced around the world. You know, even through COVID, the last few years, you know, the emergence of retail investors, particularly seen in Australia and overseas, has just shown that capital markets and the makeup of them have changed and are, you know, in a period of change at the moment. In addition to this, there has been a wave of deregulation globally that removed barriers that have traditionally prevented startups and SMEs from raising capital directly from retail investors. This is something that, you know, perhaps started in the UK, but it's expanded to the United States, now Australia, and other jurisdictions around the world. And the theme, I suppose, if you can kind of distill it, is you know, governments making a decision to remove the barriers that have prevented companies from establishing direct relationships with their investors through making securities offers. And that's certainly kind of driven the creation of the crowdsourced funding industry in Australia. A little bit about the UK. It has the most mature equity crowdfunding regime globally. The platforms, two platforms dominate the market over there, Crowdcube and Seedrs. They share between them around 90% of that market. It's that they've been in operation since around 2011. So it is relatively mature. But, you know, perhaps not mature in an economic sense. You know, they're still experiencing pretty solid growth, growing at about 20% year on year. But some interesting observations of the UK industry, it can give us a window into our future, perhaps of where the Australian crowdfunding industry might go. And Cambridge University publishes some really good reports on this, and in a steady state, which we regard the UK crowdfunding industry to be in a steady state now, it accounts for about 15% of the broader seed and venture capital industry. So we think that that's particularly useful to draw some inferences about where we think or how big we think the Australian market for crowdsourced funding could be over the next few years. As I mentioned, many other jurisdictions have followed suit, and the United States, in particular, has has recently kind of expanded their crowdsourced funding regime, and that's been increasing rapidly over the last few years, growing at about 105% compounded for the last 4 years. In contrast to Australia's, which is also growing at a healthy rate of about 70% compounded. And finally, just other socioeconomic trends that we're all experiencing. You know, unprecedented is a word that's been used a lot to describe the last few years. The COVID pandemic is really kind of driving change in so many parts of our lives. But, you know, a couple of the things for me and for us that are particularly relevant to our business and our industry is just this magnification of opportunities for people to start businesses, but also, you know, the last few years giving people some pause for self-reflection and looking for purpose and meaning, which we think is probably a tailwind in terms of people getting out there and starting ventures and particularly businesses that are focused on solving problems that I think we all agree need to be solved. So, you know, very kind of rich environment for change, and we can all hope change for the better. So a little bit about Birchal. We see ourselves really as at the forefront of this movement for private capital involving retail investors in Australia. We've hosted over 130 successful campaigns under the crowdsourced funding regime and over $100 million in funding volume. And over half of that within the last 12 months in calendar year 2021. As I've mentioned, the industry is growing at about 70% compounded, 2018 to 2021, and Birchal facilitated over 75% of the funding volume in 2021. We're approximately 6 times the size of our closest competitors, so we've been able to capture a significant share of the Australian crowdsourced funding industry. Something that we're really proud of is that we've built a profitable business. Our core business is profitable, revenue growth exceeding 100% year on year, 2.2 million in revenue for the 6 months to 31 December, with over 40% operating margin through that period, which, as I said, we're extremely proud of. And I think puts us in a unique position, even perhaps globally, for a crowdfunding platform that has done the volume of work that we've done and been able to achieve it profitably. And it's a real testament to our team, all team members, but also our kind of clever and efficient use of technology to support companies and do things efficiently. So just getting into, what we do, the problem that we're solving and the solution. For some of you, this might be fairly new. For most of you, perhaps this is not that new, but I think it's worthwhile to kind of cover it in any case. We spent a bit of time on our mission and impact statement. Tim Duggan, author of Cult Status, helped us through this towards the end of last year, and I think we're all pretty happy with articulating why we exist. And that is really to simplify fundraising so that forward-thinking businesses can build communities of engaged supporters and get back to shaping a future we all want to see. And it's taken us a few years to kind of distill it to this. We've kind of launched Birchal around the time that the crowdsourced funding industry started. And it, has been, as founders have told us, a revelation, in contrast to the old way of raising capital, being able to have a direct link to their most passionate customers and fans and be able to invite them in a legal and compliant way to join their business as investors has been a true revelation for many, many founders. And in that environment, the businesses that are out there that have stories to tell, that find aligned investors more often than not, are, purposeful. And whether that be directly purposeful by, trying to solve a problem and improve the world directly, or at least indirectly by, being accountable and transparent and committing to operate in an ethical and sustainable way that, their large group of investors expects of them. We think, that in principle, this method of fundraising and being open and accountable to a large group of people has some really far-reaching advantages, without getting too kind of emotional and romantic about this, but an opportunity really to change the economy and change society from the bottom up, which makes us really, really excited and very fulfilling work. But looking more specifically in terms of the problem and our solution, some of the challenges that businesses have faced previously is capital raising is time consuming and expensive. I don't know where to find investors, or I actually don't know how to raise investment. We've heard that many, many times. And the types of investors that are out there publicly indicating that they're open for investment might not be looking for a business like mine. And I know many people have kind of, felt that, like running a good business, but it just might not fit the return the fund model that, very kind of public and vocal venture capitalists expect and, reasonably expect to have within their portfolio. So what does Birchal do? We help forward-thinking businesses raise capital by building communities of engaged supporters online. And we use the crowdsourced funding regime to do it, and an efficient process to make this as easy as possible for companies. For investors, investors have not had access to, most investors have not had access to startups and SMEs as an asset class or as an investment opportunity since ever, really. So for the first time, startups and SMEs are being offered in this country to retail investors, available as an asset class to form part of your strategy to build wealth. But, the challenges for investors before crowdfunding were, I don't know where to find these opportunities to invest in. I want to diversify, a really, kind of responsible investment strategy, particularly for a risky asset class, is to diversify your investment across multiple investments. But, traditionally the minimum ticket sizes have been very expensive, for angel type investments, $5,000, $10,000, $20,000. So having a sufficiently diversified portfolio, as you can see, but can be very expensive. But with crowdfunding, we'll host offers with minimum parcel size as low as $50 in some cases. So, diversification is far more affordable for investors now. Reliable information on investment opportunities and their performance. This is something that can always be done better, but I think what we've seen is standardization of offering documents through the crowdsourced funding regime has certainly improved on the old world where unregulated information memorandums, some good, many not so good, have been causing concern and confusion among investors. So I think we can all agree that having some standardization and some regulatory oversight in this space is a good thing. And then, finally, if I invest, I can't sell my shares. And look, this is a persistent problem, but as we'll kind of go through in the presentation, it's something that we're actively working on as well. Robbie, did you have any questions while I was kind of punching through these things? There's a bit,
Yeah, we've got some questions coming through, and I think really, if any of these questions are exactly focused on the topic that we're covering, we'll cover those questions off then, and we'll.
Okay,
yeah,
so
we'll
I'll just keep
questions.
I'll just keep cracking through quickly. But if you see some relevant questions that are kind of related to what I'm talking about, I can kind of digress and answer those. Look, this is a summary of our process. So we've streamlined a 9 to 12 week process for making an offer of securities under the crowdsourced funding regime. There are 3 phases. There's a setup phase, then there's a pre-offer marketing phase that we call the expression of interest phase, which Birchal is in the midst of at the moment, and many of you would be familiar with. And then we have the offer itself, and all of those phases cover 9 to 12 weeks. By using the Birchal platform, companies have really great data available to them, so they can engage efficiently with, ideally many thousands of investors that are expressing interest in an offer, and also get some valuable insight as to how much demand is out there for their offer. And a lot of tools for reporting and data, all that we've kind of built out into the platform. Just a little bit on standardization, but it's been important to us at the outset to simplify and standardize this process as much as possible, because by running all of these campaigns to the same process, we're able to give companies, really valuable insights on how they're performing relative to other campaigns, but also how to structure their offer in an appropriate way by setting the minimum and the maximum targets at the right levels, and understanding which investors to engage with to make sure that you are setting the right share price and otherwise describing your investment opportunity in the right way. So a little bit on our business model. This is our fee structure for crowdsourced funded offers. It's fairly simple, and we were determined at the outset to keep crowdsourced funding as open and accessible to as many businesses as possible. So rather than charging companies high upfront fees to get involved, we felt it was really important to reduce the barriers as much as possible and then charge on success. So that expression of interest campaign that I mentioned is $900. There is no obligation for a company to proceed past the expression of interest stage and open an offer. Companies have the right to consider if there is enough demand for them to do the offer that they want to do, and therefore proceed to the next step. We charge $1,900 fee to review and publish the offer document and run our gatekeeper process, and only if the offer is successful. So that is if the offer is past its minimum target within the offer period, we charge 6% of the total approved investments. That's how we make money. But, after being in this business for a few years and seeing some really great outcomes for many, many businesses that have used crowdfunding, we feel that we add so much more value than the primary reasons why companies come to us. Companies will come to us typically because they want to raise capital and because they want to find investors. And we've shown that we can do that in a really effective way. But all of the other things that companies get, we've observed on many, many occasions, and many founders tell us at the end of the process, I didn't realize, but by going through this, I've built brand awareness for my company. I've gained digital marketing expertise. I've been able to execute a really sophisticated digital marketing campaign to support this. I've had sales growth during the campaign. I've now got experience raising capital and producing a regulated disclosure document. I think this is a benefit that we, sometimes underestimate, but the sophistication of raising capital in this way for companies pretty early in their journey, I think will be felt as these companies progress and we see these cohorts go on and do bigger and more sophisticated things. This familiarity with raising under a regulated disclosure environment, I think will pay dividends in the future, so to speak. Access to expert partners and a reason to engage them. Increasingly people are finding great PR people, great lawyers, great accountants that help them through the crowdsourced funding offer, but then are there ready, willing and able to help them as they grow and execute their plans. But perhaps most importantly for me is they end up with a bespoke audience of engaged and aligned investors that are there to support them on the terms that the company has set. If their mission and their purpose is important to them, that is the social contract that they're building with these groups of investors as they're raising capital and moving forward in their plans. But importantly as well, a pool of liquidity to fund future growth. We always say that the best source of capital is from your existing investors. And this is something that we try to get all companies to remember is, keeping your existing investors engaged and, delivering, great results and performance and a good story to tell will encourage your investors to follow you along the journey. And that's something that all companies should really aspire to. So I've just got some information about our audience here. So as I've mentioned, we've developed a really unique relationship with what we think is probably Australia's largest group of dynamic and early stage businesses. We have an average inbound prospect of about 28 a week. Investments completed on the platform exceed 55,000. We've hosted over 130 successful offers, and we have over 130,000 people as registered Birchal users. And I've included some charts there just to show the growth in funding volumes in successful campaigns and investors over the last 4 years. But as you can see, 2021 was a really significant year. 2020, despite the challenges, to achieve substantially the same results that we achieved in 2019 was tremendous. And particularly because, that second and third quarter of the calendar year, as COVID was escalating, although we were active, it was still fairly depressed activity, if you like, but a very strong growth trajectory in, pulling into the last quarter of 2020, which just set up a record-breaking year last year. So as I've mentioned, we have been successful in bringing mission-driven founders and investors together, and these are just some great examples of businesses that are, clearly out there, working to improve the world in their own way and for the issues that are important to them. And it's been a real honour to host their offers and enable them to connect with similarly aligned investors that want to support these companies on their journey. And we look forward to hosting many more because we think it's good for everyone and it's good for the world. In terms of the Australian crowdsourced funding industry, so as I've mentioned, 2020 still great performance, but through COVID, that first half was quite depressed. But 89 successful offers last year, an 82% increase on 2020, 71 million raised across the industry, 140% increase on 2020. And over 37,000 investments, almost double, just over double the year before. Last year, we had a couple of really significant milestones in the industry. Activated Nutrients, Biome, a company that we hosted an offer for on Birchal in 2019, around 300,000, became the first crowdsourced funded company to list on the ASX. Which is a really significant milestone because it is an answer, not the answer, but an answer to the persistent question of what is next once people invest in a business through crowdsourced funding. And we congratulate the Biome team and Activated Nutrients on this achievement. And it's a really exciting development for the industry, and hopefully we see many more. Also, professional investors getting involved in crowdfunding in, I suppose, quite a notable and in some cases public way, which is tremendous. Xeroco most notably received $6 million in investment from Square Peg on substantially the same terms as retail investors as part of their $11 million round. $5 million was raised through crowdsourced funding in October last year, the statutory maximum, and the first company to do it. A few really great things wrapped up in that Xeroco campaign. But earlier in the year, Thrive, which is now Thriday, they recently rebranded. They raised $3 million in 3 days, and half of that came from professional investors, some highly regarded VCs and a significant Melbourne family office. So this is, I suppose, the beginnings of what we've observed in the UK, where professional investors regularly invest through crowdsourced funded platforms over there. Some of the Cambridge data puts, total funding volumes from professional investors at about 50% of all funding that's deployed through crowdfunding. So this is something that we're hopeful will, we expect will continue in Australia as more and more investors and companies become aware of the efficiency and the benefits of what we do. So just a little bit on the landscape in Australia. The industry funding volumes, as I've mentioned, are growing about 70% compounded. Birchal's performance last year was very strong relative to other platforms. 59 successful deals, about 66% of the industry, 53.5 million in funds raised, 75% of all funding volumes through crowdsourced funding. When the regime started, there were 7 licenses issued in January 2018. Birchal was among those 7. I understand that a further 6 or 7 licenses have been issued by ASIC to platforms subsequent to that. But really, the majority of the activity in the crowdsourced funding industry has taken place on 3 platforms: ourselves, Equitise, and On Market. I should note that Equitise and On Market, as I understand it, also facilitate wholesale offers and IPOs and other things, whereas Birchal at the moment really only focuses on retail crowdsourced funding offers. But thinking about crowdsourced funding, that is how these stats are presented. So we clearly have been the most active platform for this industry. And I think it's our focus that is on crowdsourced funding and really making sure that we've optimized our processes for this very efficient regime has put us in good stead to do the volume of work that we've done. I've just put up a summary of our financials here. We are intending to provide audited accounts. This is on a voluntary basis. We have a subsidiary that holds our financial services license, And that does need to get audited as a financial services licensee, but we've decided to have our group accounts audited, despite the fact that we are still a small proprietary limited company. It's our intention to include audited accounts in the offer document when it's ready. These accounts are pending the final audit sign-off. But as I've mentioned before, the half year, so the 6 months to 31 December, was really a stunning performance for us as a business. These are management accounts, and these won't be audited, but they have been prepared by our accountants on the same basis as the audited accounts. But as you can see, just over 2.2 million in revenue for the 6 months for the first half of FY22, and just under $1 million in earnings. So I'm going to talk a little bit now about our growth strategy. And really, there's kind of three directions or three areas of focus for us when we think about growing Birchal and what we do. The first is, as you would expect, optimizing our current core business, which is crowdsourced funding offers in Australia. We have a culture of continuous improvement in our business. It is wrapped up in our process. If you've been through a crowdsourced funded offer with us, you'll know that we have a detailed debrief session that Claire from our team runs, because we really do want to know what we did well, but areas that we could improve, because our goal of simplifying this process as much as possible can only be achieved if we're always looking for ways that we can refine things, improve things, and just do things better. And a lot of the improvements that we've identified in the platform have been as a result of feedback from our customers. So it is really critical for us. Moving along, like launching products and services that complement our core business is another area of focus for us and how we want to grow Birchal. But it is looking at things, I suppose, with a disciplined lens, always asking the question, why, how would this support our mission and our objective of simplifying fundraising for businesses? There are lots of things that I think we could do, certainly given our audience and attraction, but it's things that really do need to align with our mission, and I'm going to explain a few of those as well. And then launching Birchal in new markets. Now, whether that's our core offering of crowdsourced funded services, or whether that's some of the adjacent products and services that we've been talking about, providing those in new markets. But I think it's incumbent on any business to think about, where else could I be doing what I'm doing? Where else can I be adding value and making an impact? So this is something that we're always looking at. I'm just going to talk about stakeholder engagement, because this is one of the first initiatives that we're working on and we're really excited by. But we've observed that startups and SMEs really could be better at providing regular updates to their stakeholders and shareholders. And look, this is something that we've identified even through businesses that have been through crowdsourced funding. Some businesses do this amazingly well, others not so well. But I think everyone could be, could not only improve, but would welcome a tool that would make things easier for them or more directed for them. So as a result, we're building, and we're kind of well progressed on building a simple but powerful tool for companies to manage their stakeholder comms. And this is scheduled for release later this year. We've got, I suppose, a group of beta testers that we'll be working with to further iterate on and refine the product before we release it. But the MVP feature set will include, the ability to prepare beautiful, informal reports and broadcasting these to a range of customer audiences. So that's why we're talking about stakeholders, because shareholders will be one audience. But if you're thinking about a company, even a company that's been through a crowdsourced funded offer, There might be a bunch of people that have expressed interest in your offer. They're interested and aligned with your business, but you didn't get them to invest this time. We remind companies that that's an audience that should not be neglected. People are kind of saying that they're going to support you. They might not support you with capital at the initial step, but being able to involve them on your journey is an opportunity and something that could be to the advantage or credit of any company. We feel that this tool has the potential to help companies do that. Another really cool feature is companies will be able to select a relevant key performance indicator from a KPI library that will track a range of business metrics. And this is something we're really excited by. Ultimately, we envisage this as being an open source library, but a lot of discussion is going on at the moment about whether the business metrics, the financial accounting standards and concepts that we've been using for over 100 years, whether they are appropriate for businesses operating in the modern world. I've certainly been taken with the earned growth rate concept, which is an update to the Net Promoter Score that really looks at loyalty and the quality of revenue in a business, and other metrics like this. Adam, who's our chair, is also group treasurer at Australian Unity, is really interested in the opportunity to use this to get companies thinking about environmental, social, governance, ESG type measures, other impact type measures, getting companies thinking about measuring the things that matter and reporting against them at an early stage, because we think that this is going to drive really good behavior and practice as companies progress and get bigger. So we're really excited about this. But the other feature is companies will be able to receive feedback on these reports and private messages from their stakeholders, because I think what's been missing a lot of the time is this opportunity for two-way communication, but also the ease and efficiency of it, making sure that it doesn't become overly burdensome for companies to aggregate and synthesize and interpret this feedback, but they're able to kind of take it on in an efficient way and then action feedback from the stakeholders that they're sharing reports with. Really excited to release this later this year.
Some great comments in the chat and Q&A with regards to stakeholder reporting. Thank you very much, everyone who's commenting here. I think, we can absolutely say, Ken here is saying, thank you regarding the stakeholder engagement plan of several investments so far, and the communication from the businesses post-raise has been underwhelming, to be kind. Startups, to make you reconsider future investments. Of course, this is something that we are very aware of, and we have been thinking of for a long time, and it has been in the works for a very long time. So really thrilled to kind of see these comments coming through, and hopefully we're making that part of the ecosystem, once you make an investment through the Birchal platform, that much better, so you are completely aware of what's going on with your investment.
Brilliant. So it's not just us that's excited by this. That's great. I think, look, the only thing what I would say is, from my observation, I don't think this is for want of trying. I think that companies would, want to do better at this, but in many cases they don't know how. So that's why I feel it's incumbent on us to simplify this process for them, as we've simplified fundraising and make it as easy as possible for them. Yeah.
Totally.
I'm just going to keep cantering through, but Birchal Trade. So this is our first initiative in looking at liquidity solutions. So, crowdsourced funded securities, like other, shares and securities in private companies, are illiquid. They're not tradable easily, certainly not on an organised marketplace. We think that, the industry will need something, a marketplace for people to trade securities. But in the near term, things that we can do right now that don't require legislative change, is a low volume market, and we've been talking about this for a while. There are some challenges with the way that the instrument is drafted, the way that the law is at the moment, and the conditions need to be right. It's all about building demand for stock first, and then showing that demand to shareholders. Rather than kind of providing the impression that stock can be sold. I think in the absence of demand, that's probably not a great outcome. Being able to find a pilot for this, although there's lots of interest, it has been difficult for us to find the right pilot. But we're pretty excited by this service because it is an immediate solution, perhaps not the ultimate or best solution long term for this, but at least it'll kind of take us a step towards that. But a low volume market, in summary, is a financial market that can be operated without a markets license, provided that no more than 100 transactions and no more than $1.5 million in aggregate value are facilitated within a 12-month period. So we've built this service. The technology is ready to go. We have plans, and we would like to pilot this service this year. I've said publicly that if we have a surplus of demand for our own offer, we might just use this service ourselves, because we think that it will be worthwhile to show people how this will work, and then also provide us with a good platform for I suppose asking for changes or adjustments to the law and regulation to kind of facilitate more of these in the future. And I'll just spend a little bit of time talking about these scale challenges that we've seen. But what our view is that there is a potential to put proprietary limited companies into the public company regime inadvertently by transacting shares on a low volume market. So that's something that I think doesn't really align with the fact that proprietary limited companies can now, issue shares to a potentially unlimited number of investors through crowdsourced funding. So, we would argue that some adjustment is needed. There may be an administrative burden on ASIC. There aren't very many low volume markets. So, if we end up kind of running hundreds of these or thousands of these a year, ASIC probably would need to think about the administrative burden on that. So I think kind of longer term, we probably need to have a look at how this would be managed. And it is a relief instrument. It's not written into the law. So, but we think it's a really good pilot, and it's a really good test case for people to get out there and, build demand for stock, find some buyers, lock in some trades. And if no one dies and everyone's happy, then maybe we'll be able to do more often. So, yeah. And that's all I've got for the moment. So, really happy to jump into some more questions.
Well, I've been frantically answering some of the questions in the chat. So thank you everyone who's been asking some questions in there, and for the questions which are in the Q&A already. I do see that a couple of them relate to some of the slides. So if we do need a little bit more sort of justification for the exact question, I will ask for it, just so we make sure that we're addressing the exact question that you're asking. So really, starting with some of the questions here, I guess I'll start with Martin's here. Of the 130 campaigns, are they all providing returns primarily capital to investors, and how many have failed? Matt, over to you.
Of the 130 campaigns, look, I think only a couple have actually provided any returns to investors. There are a couple of companies that pay dividends, and for very practical reasons that, the founders of those businesses don't draw salaries from their business. They pay themselves dividends, and they're profitable businesses. So the investors in those two businesses do get dividend checks.
Yep.
But the vast majority of the businesses that we host offers for are growth businesses. They're pursuing a growth opportunity in the main. And, as a result, any capital, surplus capital or profit that a company that's pursuing a growth opportunity makes is usually reinvested to pursuing that growth opportunity. So the fact that, they're not kind of paying dividends, I don't think is too, unusual, perhaps. I did mention that the first kind of significant exit for a crowdsourced funded business was Biome, Activated Nutrients. I was an investor in that offer. So it's kind of nice to see them on ASX now. I still hold my stock. But yeah, sure, for a lot of those investors, that was a decent return at IPO. It's come off a bit since trading, but the ASX kind of been having some trouble lately. But 6 million pre-money was their Birchal offer. It was an oversubscribed 8 million IPO at $40 million. So decent return. I think they're probably trading at about 17 or 18 million now, perhaps. So the businesses that have failed that we've hosted offers for, there are a few, some on our platform, some on other platforms. I can name a few. Sheba Rideshare, I think kind of publicly, people saw that they entered administration, were really pleased that a deed of company arrangement was executed, and that business will still trade with new owners. Unfortunate outcome for shareholders, but I suppose highlights the challenges of rideshare businesses, particularly in the last few years that we've experienced. A couple of others, Bring Me Home, another company that we raised money for. Difficult, challenging trading conditions through COVID. But Jane Koo, the founder, I observed the process that she went through in communicating with investors and winding down that business. And in my book, she is an amazing founder, an amazing person, and a very hard decision and a very hard thing to go through. But that's kind of there. DC PowerCo is another one, very kind of large campaign, and Nick Francis Gilly, again, communicated really well with the shareholders, I believe, and highlighted the challenges that they had in executing their business plan in that industry. And Gig Super is probably another one that, there was some press about recently. Personally, I think there were some issues with the way that was reported in the media. The company's in external administration at the moment. And I think the founders will probably like the opportunity to speak more publicly about that once that has concluded. I think I probably can't say much more about Gig Super than that. But, I've kind of mentioned a few of the, less than ideal outcomes. But for the companies that are doing well and executing well on their plans, there are some really great success stories. And although they haven't resulted in a return to investors yet, there have been at least 20 follow-on offers since the regime started. Whether they be second or third crowdsourced funded offers, and an average uplift in value of about 114%. So, there are some really good successes and gains, albeit paper gains. One exit, so it's one kind of proves that it's possible, and hopefully there are many, many more. And a few failures or less than ideal outcomes. But from an industry perspective, I suppose sitting back. This is always regarded as a risky asset class. I think any professional active investor in this space would agree. And this was one of the concerns when, the government was putting crowdsourced funding regime in place. It is the reason for the risk warning that needs to be published in every document and displayed on every advertisement and, prominently on every crowdfunding platform. Yes, it's it's for people to kind of decide whether they want to take the risk and figure out what strategies they can have as an investor to manage the risk of this, the inherent risk of this as an asset class.
Yeah, no, definitely. And David here has asked a brilliant question. What percentage of the total Australian venture capital market does Birchal represent?
Right now, that's a really tricky question to answer, and I'll explain why. So in our offer document, we've prepared some, which people will be able to see when the offer document's available, but we've prepared some analysis on the market size based on observations in the UK, observations in the States, and then looking at, and a proportion of the venture capital industry, you know, based on that experience in the UK is one of the approaches that we take to size the market in Australia. The most recent, you know, I would argue, credible data for the size of the Australian venture capital industry is a bit old from my perspective. It's the 12 months to 30 June 2021 puts the venture capital industry at about $3.5 billion. And I've been reading the reports lately that, you know, that has spiked massively over the last, you know, 6-7 months. But, you know, I'm still kind of sensing some kind of concern or disagreement about like how accurate those figures are and what's in and what's out. But, you know, we think that using the UK experience and 15% of the broader VC market on that, you know, 12 months to 30 June puts the Australian crowdfunding industry at somewhere around $500 million by 2024. So, you know, we're still in that ramp up phase, we would argue. And, you know, there's a bit of growth yet to come.
Yeah, definitely. And Martin here has asked a question which I knew was going to come up, and Stephen has asked the same one, so I'm going to address this here. And really, they've asked how many of the campaigns as a percentage fail to meet the minimum capital raise. Stephen's asked it in a different way, basically asking what the success percentage is.
Yeah, look, I can get the figures, but I think they're above 90%, 85 to 90% in terms of offers that are opened that ultimately are successful. Now, that might seem like pretty high as a success rate. And the reason for that is the expression of interest process gives companies really good insight in terms of the offer that they can do. So the minimum target is usually set in response to the data that comes through the expression of interest process. Where companies are not successful, it's where I think, and, you know, Robbie, you know, keen for you to kind of offer some insight or correct me on this, but my view is companies that don't succeed or pass their minimum target, they don't execute this final kind of critical step of engaging with EOIs to understand that there's support for their valuation or other aspects of their offer before opening it. And once an offer is open, there's no mechanism to change anything about it. So if you get your valuation wrong, or if there's, you know, some other aspect of how your offer is presented that you haven't tested with investors, you know, people that are going to invest in the offer before you open it, you're at risk. And I think that the majority of companies that, you know, have not succeeded in their crowdsourced funded offer, like probably have not, you know, performed that final critical piece correctly. Would you agree with that, Robbie?
Yeah, look, and there's a really important component of this to add as well, is that because we run an expression of interest campaign for every single company that goes through the Birchal process, some companies go through the process and want to run an expression of interest campaign to validate if the raise amount that they're looking for is there. Of course, they would love for their intentions to be able to proceed to an investment offer, but often might be the case that a company might go through an expression of interest campaign to really validate if the interest is there for their offer. So we want to make sure that we're evaluating our success rates based on every company that launches an offer, and those percentages of certainly over 85%. And really, we know that those companies have committed because they've been able to go through that process we've got a really strong level of data that supports what an expression of interest data set needs to look like to proceed to that investment offer. So therefore, we've been able to kind of build and grow the business from these two very key campaigns. And the EOI campaign was never something that you absolutely vitally need to do, but something we made integral as part of our process in order for a company to be able to actually de-risk that. And if you look at comparative equity crowdfunding platforms overseas and their success rates, especially when I was working in the UK in the equity crowdfunding industry, these success rates would fluctuate between about 45 to 60%. And we've successfully been able to build a stronger, consistent success rate for companies throughout the process.
Mm.
And I'd love to move on to some of the other questions here, and also say thank you to everybody who's asked so many questions here. We're going to do our very best to get through them and really, answer them in as much detail as possible, while making sure that we can answer everybody's questions. So really appreciate your patience in sitting there and getting all these questions addressed as we do try our very best to get through them. So a question here around what vetting does Birchal undertake of businesses before being engaged in a funding round? Are there minimum requirements that need to be met? Does Birchal take on any of the risks associated with funding rounds, or does it have robust indemnities or other contractual protections in place? I think I'll throw over to you, Matt, to cover sort of eligibility requirements, and then I'm happy to cover off exactly what kind of companies we do look to work for, because there's two components to that.
Yeah, for sure. It's a great question. Look, we, in terms of companies, and the companies that get on the platform and ultimately get to make an offer, there's a few natural filters through our process. So, a company needs to complete an eligibility form on the website. That kind of makes sure that they're aware of just these threshold eligibility requirements under the Corporations Act for a company to make a crowdsourced funded offer.
Yeah.
The next step is a company will typically have a meeting with one of our campaign managers, and they will, understand more about the company. But I think, one of the things from our perspective at that meeting is figuring out how marketable is this as an opportunity, because we want to work with businesses that we can add value to, and businesses that perhaps don't have a story to tell, or might find it hard to engage a broad audience, or are otherwise extremely fearful, and quite rightly, but fearful of having thousands of investors involved in their business. They're probably businesses that are not appropriate for raising funds in this way. There are other funding sources that the businesses like that can consider. But provided that the kind of all of those threshold issues are positive or achieved, then we will start our gatekeeper process, and that is our regulatory requirement as an intermediary under the regime. And it's probably important to spend a bit of time talking about this, because when the government put the crowdsourced funding regime in place, the concept of the intermediary was built into the Act, and that is Birchal. Birchal holds a financial services license authorising it to host crowdsourced funding offers, and we are the intermediary for the offer. ASIC does not review these documents before they are published. That is our role as the intermediary. So we have a quasi-regulatory role to perform, and that really kind of marks out how we are involved in hosting the offer and our relationship with the companies. We sit as the intermediary and need to balance the interests of not only the company, but investors as well, and then the industry at large. So our gatekeeper process is part of that. That's to make sure that the company is eligible to make an offer, the offer it's making is an eligible offer to be made, that all directors and senior managers of good fame and character, and we've done all of the necessary checks on them. Then preparing their offer document, which is a regulated disclosure document, reviewing that and making sure that it meets the standards of the Corporations Act. We also provide some commercial advice, but we see that, we're just one data point. Like, our process is designed to, for a company to get feedback from investors that are interested in the offer. So as I've described, that critical, period of feedback with investors that are going to invest is essential to the success of an offer. And then when an offer is live, what is, and I think globally, a really innovative feature of our crowdfunding regime is that, not only is there a live chat room, it is a regulatory requirement for us to operate a live discussion facility for people to ask questions of a company that's making an offer and Birchal as the intermediary. So, it is, in my view, a really great regime piece of legislation that does have a lot of really good safeguards for investors, clearly articulates the role of the intermediary in hosting an offer, and additional protections for retail investors as well. So, yeah, hopefully, I think that answers the question.
It definitely does. And I think I really want to elaborate purely because I've seen a comment in here from Thomas just stating that the process, comment here is it seems fairly bland and risky, submitting a form to have a meeting with one person and assessing their marketability. This is really a high level explanation, because the eligibility requirements really need to satisfy that the business can lawfully run a crowdsource funding offer on a licensed platform. But then there's the Birchal assessment criteria, which we need to assess the business to make sure that they've got initial traction, whether that be initial revenue, what the business looks like from a community perspective. Has it focused on building that community yet? Does it understand enough about those customers to be able to actually go ahead and raise investment? We ask an awful lot of questions from founders before we actually go through that process with them. And really the whole Birchal, I would say, funnel and business has been built on having a lot of conversations with individuals and getting them to understand equity crowdfunding and all the components that go into it, and us being able to understand their businesses. And for some businesses, that might take them months for them to get completely familiar with it, and for us to get completely familiar with their business. So it is a really quite well-structured process, and there is an awful lot that goes into it. And for purposes of time, I don't want to go through every single question about with regards to our criteria in this session, but
yeah. I'll circle back to that and kind of like re-emphasize the point about marketability. It's not as though marketability certainly isn't the only thing, but it is the first thing that we consider, right? Because, and why we've done it, we think it's a really innovative approach. That doesn't mean that we kind of shortcut any of the other things in making an offer. We take our role as intermediary very, very seriously, and have declined to host offers on many occasions, many that we can't speak about publicly, because the company or the offer or the individuals behind the company don't meet the standard that we come to expect of the industry. But the marketability point is, it is a moot point. If we don't feel that we can add value to a company, or that an opportunity is not marketable, well then, there is no point in putting them through all of the diligence requirements that is a burden on us, and it's a burden on the company. And then ultimately, if it's not an interesting opportunity, it's all for naught. So that's why we kind of lead with that marketability filter, and then provided that they, achieve that threshold, then we'll kind of, do all of the other things, the very important things that we do.
100%. And we've got a great question here. Does Birchal have any Indigenous staff members, and has there been any successful funding rounds of Supply Nation registered businesses?
We don't have any Indigenous staff members that I am aware of. And in terms of Indigenous and First Nations people, founders, we've been really kind of interested and I suppose proactive in engaging with business groups that have started to emerge to support and highlight Indigenous founders. We're extremely proud to host an offer for Sober last year, Indigenous, founded non-alcoholic beer brand, Clinton and Lozen, an amazing team, amazing founders. I can say personally, I learned and we learned a lot as an organisation working with them and seeing how they, how they see the world and see issues. And as a business, we've got a lot to to work on ourselves, and we've said internally that we want to put a reconciliation action plan in place, and this is something that Clinton helps other companies and government organisations with. I suppose the reason why I'm kind of spending a lot of time talking about this point is that we see equity crowdfunding as a great leveler for people to, raise money and connect with their audience on the merits of their offer, rather than, I suppose, be prevented by the traditional gatekeepers, if you like, the bias, I think, in the capital that's given to Indigenous and minority founders, but also to female founders. There's been well documented, well publicised, and I think crowdfunding is, comparatively a lot better than other sources of funding in terms of getting capital to people that are otherwise underrepresented in funded. Third time lucky in funded. In funding statistics, but more work needs to be done. And I think it's more on the supply side. I think what we've shown is that, good opportunities, good founders can get funding through crowdfunding. And what we want to do, I suppose, is just highlight this and get people to start believing that, if they put something together, put a business and an idea together, that there are people out there, Australians out there, that will back them and support them. So, yeah.
Yeah, 100%, 100%. And this question is very much for you, Matt. How do you ensure the conflict of interest gatekeeper, so in brackets, the gatekeeper for right valuation for a business versus the offer success fee, which is directly related to approved investment? So I think that in finishing off that question, how do you ensure there is no conflict of interest between approved investment and the gatekeeper process?
Yeah, look, I mean, it's a really great question. There is, there is a conflict, but it's a conflict that's managed through disclosure. So everyone kind of knows that ours is a success-based fee. It's, we take our gatekeeper role very seriously. We decline to host offers if they don't kind of meet our gatekeeper standard. So yes, it is a conflict, but it is a conflict that's, that's managed. And I don't think that like the success model is that controversial anymore. There was some discussion about it because it wasn't, articulated as being specifically permitted or specifically prohibited under the Act. And it was just kind of something that the industry has adopted as standard practice. And I can honestly say, like, within our own experience, it doesn't really affect us. Like, we take our role as intermediary very, very seriously. And I suppose in the context of a business that is growing in size and scale, it is the industry that is more important to us than any single deal or like revenue that we would get from a single offer. And in that regard, we see ourselves as stewards of the industry. So, we're, playing a long game, not a kind of short-term revenue focused game. So.
Yeah, most definitely. Most definitely. And I love the question here from Scott, who's interested to understand how our success fee of 6% compares to our peers here, and then versus the UK and the US. I can answer that piece. Also, has the success fee changed much on average as the markets have matured, such as the US and the UK? Matt, I'll let you cover off for the Australian market, and then I'll elaborate on the UK market for sure.
Yeah, look, our success fee has been our whole fee structure has been the same since we launched, and I think our commitment to our fee structure is really driven by our desire to make this open and accessible for as many businesses as possible. So that means that an offer that only raises 150,000 pays 6%, but an offer that raises 3 million also pays 6%. It means that we don't get too concerned about fees, I suppose, when we're hosting an offer. In many cases, like we expect at the outset, or as founders do, they want to raise lots of money, but once we run an EOI process, the expectations are managed either up or down. But it just helps us to kind of focus on doing good work for businesses and not, I suppose, not be too concerned about our fees. We take small fees for a small offer, and then large fees for a large offer, and it all kind of adjusts, I suppose.
Yeah, absolutely. And look, I mean, I cannot comment too much in the US. I don't think we've had too much oversight into exactly what the fee structure has looked like from there. But I worked in the UK equity crowdfunding industry for 3 years before joining Birchal. In fact, joined Birchal in September 2018, which was move not just halfway across the world, but across the world to come and join the Birchal team. And basically, in working in the UK industry, I did see, and I know that the success fee originally started out at 5%, and the dominant platforms, Crowdcube and Seedrs, did increase this up to 6%, 6.5%, and then 7.5%. I do in no way want to comment too much on exactly what the internal practices were all the time, but generally there was a lot of back and forth with fees and fee negotiations, which of course takes a substantial amount of time. And as Matt said, as we kind of have a one platform approach and really just make sure that we provide services that businesses are always comfortable with in regards to our success fee, we don't have to communicate it in any means whatsoever. And as you can see, we're always focused on just providing and adding as much value for the businesses as we possibly can. And so we've been able to grow in this position. And luckily, the businesses that we have been able to host offers for have been really just delighted and thrilled as a result of it. And so our success fee has really remained exactly the same since the beginning. So that's always been our focus. So I'll move down into the other question here, which is kind of similar to a question which we answered before, but there's a different element to it. So what's the current proportion of funding in Australia between venture capital versus crowdsourced funding? Do you ever see it reaching similar levels, or maybe a 50% proportion to the UK, for instance? And I know you've touched on this in your slides before. So
yeah. Look, the venture capital industry in Australia is growing. Recent announcement by Blackbird raising $1 billion fund. Like, all of this is great. Where we feel we fit in the financial system is, that earlier stage. I think what we've seen is, a lot of the VCs that have, the more established ones, have kind of moved up and are servicing businesses that are at a later stage. And we feel that we provide a really an efficient, effective mechanism for companies to aggregate multiple types of investors for those relatively smaller type raises. in terms of the proportion of the venture capital industry, as I've said, 15% looks to be, what a steady state share might be based on the UK experience. We're hopeful that Australia will achieve a similar size over the next few years.
Yeah, absolutely. And just to everybody who's saying they do have to shoot to another meeting, really appreciate you attending today, and we will be sending around the recording to absolutely everybody who's here. So if you have to drop off, please don't worry. Even if you have an open question, we will be answering your question before we sign off today. So just in going down through some of these, also got a question here. Can Australian investors also invest in those new markets that Birchal expands to? Are there any regulatory complications with doing that? Matt, this is a question for you.
Yeah, look, I mean, for our core service offering, if we were to move to any other market, it would be, like complying with the regulatory regime, the securities regime in whatever market that was. And, as a result, the restrictions for international investors from that market would apply. And also the restrictions for advertising into the Australian market would apply. So it's not a straightforward answer. It obviously depends on, what kind of investor you are and how the opportunity is presented and so on. But, just providing our current core offering in other markets is not the only part of, our international strategy. That's why we're, looking at adjacent opportunities. Investor reporting is the first initiative in this area. It's exciting because as an informal reporting tool, it doesn't require the same level of licenses and approvals that, offering crowdsourced funding services do. So, yep.
Yeah, most definitely. Most definitely. And Darren here has asked a question about who our main competitors are, not only in Australia, but in existing and emerging markets in the US and Europe. Understanding this will give guidance to the likelihood of growth and therefore return on investment. Really great question, Darren. I'll throw it over to you, Matt, and happy to elaborate on any other points which I think are relevant.
Yeah, look, Crowdcube and Seedrs are the two kind of major platforms in the UK. That's been a heavily contested market. Robbie worked at one of those platforms and knows that industry intimately. Very contested market. I think they share about 90% of the industry between them. There's recently been a harmonisation of crowdfunding laws across the European Union, and that's kind of shaped the strategies of the players in that part of the world. It's important to note that Republic, one of the crowdfunding platforms in the US, has acquired Seedrs. Seedrs and Crowdcube attempted to merge recently, and the competition regulator stopped that transaction taking place. And both of those platforms have taken other strategies since then. So Republic has acquired Seedrs, and we understand that Crowdcube has accepted investment from Circle, which is a US company. In the States, about 80% of the market for Regulation CF, which is the most analogous to the regime that we have in Australia, that can raise up to $5 million within a 12-month period. So 84% of that market is shared between three platforms in the States. This is data from Kingscrowd that we rely on. That is WeFunder, Republic, and Start Engine. So that is also a fairly heavily contested market. If we look at Australia and the market structure of crowdfunding in Australia, I would argue that Birchal is in a globally unique position. I think we've got the largest market share of any crowdfunding platform in a developed market. And I think I'd also argue that we're probably the only platform that has been profitable at the scale, having the scale of funding volumes that we've had as well. So two things that I think kind of make us globally unique, I'd argue.
Yeah, absolutely. I mean, early days of equity crowdfunding platforms focused on growth and really educating the market. I think it's something which we've been able to benefit a little bit from, so we can point towards other platforms overseas. But really, I think we have fundamentally taken a little bit of a different approach in being sort of so focused on our product, our core offering, and very much so growing a business and being so focused on efficiency and scale and how can it operate at scale. So we've been able to be profitable, which is very, very fortunate for equity crowdfunding platforms, because in the early days in the UK, platforms were certainly not profitable or anywhere near there, and education across the market is very expensive. So yeah, it's definitely a different stage we're at, which is great. So I've got a question here, which is really interesting one around, do all investors expect a cash return, or is there a market for biosecurity and environmental results and or carbon credits? So I'm guessing this is relating to offers that we host on the platform. Matt, I'll hand this over to you.
Sorry, can you repeat the question?
So this is a question. So do all investors expect a cash return, or is there a market for biosecurity and or environmental results and or carbon credits? So every investor who's investing in a company via crowdsourced funding is receiving shares within that business. Of course, the majority of those investors would love to see a cash return at some point in time, and a potential exit is discussed and provided in the offer document. But of course, the business is going to use the majority of those funds to go on and grow the business, as they illustrate in the use of funds section. As a result of sort of biosecurity and environmental results and our carbon credits, Matt, I'll hand over to you to kind of answer what the regime would say on this.
Yeah, look, I mean, the only security that can be offered, as you mentioned, Robbie, at the moment in Australia is fully paid ordinary shares. There is scope to increase the types of securities that can be offered by regulation. So it doesn't actually require legislation to be passed. The Treasurer can kind of decide, whoever that might be, when we get to it. But I think the question is kind of asking about companies that are just not focused on returning capital to investors, but perhaps achieving a positive impact in an environmental or social sense. And in that regard, it's a great question, if that's kind of where it's going. Absolutely. And I know I've kind of been talking a lot about investor reporting at the moment, but we're really excited by the potential of this tool to help companies be considered and accountable about measuring not just the growth elements and financial metrics of their business, but impact. And I would argue that in an environment where there are increasing concerns about greenwashing and things that aren't really achieving an impact but just being repackaged, so investors that have ESG imperatives in their mandates can invest in them. Showing companies at the earliest stage how to measure impact, actually inviting stakeholders to tell companies what they're interested in and how they want companies to measure things is a really good practice. And I think an opportunity to change things from the bottom up. We'll absolutely have more to say on that in due course when we're kind of ready to publish the product.
Yeah, fantastic. And this is a question probably around the companies that raise funds on the site. Does the capital raised come from Virtual's database or the company raising? I can take this question purely because this does come down to the typical type of company that we have that initial chat with, and we really want to just understand not only their motivations for doing equity crowdfunding, but also so their understanding of raising capital this way, and us going through that education piece with them. Because if a company doesn't have a marketable community that they can market an offer to like this, fundamentally, we know that there are not enough people out there who know what this business is doing, know why it's exciting, and know why it's a unique opportunity. Virtual's database, we simply see this as an additional sort of factor that can contribute to every single capital raise. We market every single raise that goes live on the Virtual website fairly across every single one of them. So we want to make sure that people come to us, they use the platform for the products, the data, the tech, and the expert insights that we have to offer. And we really want the company to be able to raise capital and fundamentally understand that that capital is going to come from not only their database, but new investors that they're able to market to through the crowdsource funding regime, which they aren't able to do so outside of that. So that's one really unique factor as a part of the crowdsource funding regime, because they can market it widely. And because we've been doing this for so many different raises, this is where we really specialize. It's what we help those companies to fundamentally understand is where those new investors might be and how we can help them really tap into those markets to be able to advertise those offers. Matt, if you want to add anything else, please.
Yeah, look, it's I think it's we say to companies often, it's perhaps the wrong question, and it's the wrong question because the old way of doing things was to cultivate a list of investors and then just charge companies for access to that list. And you can't guarantee the performance of a list. And we've, kind of heard lots of stories about terrible outcomes. But where we put all of our focus, Robbie, as you've said, and as you know, is just helping companies to tell their story in an engaging way and to find a relevant audience efficiently and cost effectively. And that's where we put all of our focus and impact. And that's how we've, I suppose, built a scalable and repeatable process.
Yeah, absolutely. And Michael here, your question around how does this fit in with the constitutions of companies? I believe that you were asking this when we were talking about virtual trade. So I'm going to hand over to Matt to answer that. But please, as I can see that you're still on the webinar, if there is any particular part of the question that was relating to something else, please do, send a chat and we'll cover that in this question now.
Yeah, company constitutions, it's, particularly because we have so many proprietary limited companies using the regime. As a proprietary limited company, you have far more latitude as to what you put in your constitution than you do if you're a public company. And companies need to make decisions as to how they want to organise themselves. Every company that goes through process of making a crowdfunding offer will revisit their governance arrangements. We insist that they do to make sure that they're appropriate for what they're about to do and the fact that they'll end up with potentially hundreds or thousands of shareholders. We've gone through this process ourselves in readiness for the offer. We worked with Ashurst, our lawyers, and the instructions to them were to prepare a best practice constitution that strikes the right balance between investors and the company and is appropriate for what we're about to do. We're obviously very happy with that document, and it's it'll be a good reference point, I suppose, for other companies that are thinking about doing this as well. A lot of work went into making sure that it was appropriate from an industry perspective. But the lack of standardization of constitutions, I think, as time goes on, will be an issue that does need to be solved. I kind of imagine a world where these documents are standardized and that founders are able to answer a few questions. But by and large, there is some industry standard as to, what a constitution for a crowdsource funded company should look like. And in the context of a virtual trade facility or anything else, indeed anything else, it's preemptive rights that is usually where the rubber hits the road on this issue. And, we've got mechanisms in our constitution to kind of avoid the need for preemptive rights or to have it in a much more manageable way because, practically, a small holder of shares or a holder of a small parcel of shares, shouldn't really have to be offering that in proportion to thousands of other shareholders. That's a kind of, a distorted outcome. But companies will need to consider this if they're thinking about making a crowdfunding offer, and indeed if they were thinking about, using Virtual Trade to operate a low volume market, whether they have the authority to do that or if it practically works under the constitution. If not, an amendment would be required. And unfortunately, that's the world that we live in at the moment. But I'm hopeful that we can fix this as time goes on.
Yeah, awesome. And I've seen a few questions in here regarding this, so I'm gonna throw it over to Matt to address this one, and hopefully we'll clear up some of these. Matt, we're at the same number of questions that we started with, so we'll do our very best to get through all of these as quickly as we can to everyone who's still here, and really appreciate your time. So what's the future raising and possible exit plan for Birchal, and what are the funds in this raise going to be used for? This is going to be covering about 4 or 5 questions here that we've got.
Yeah, for sure. So the future for Birchal in terms of like exit strategies, I mean, there are a few options, the kind of options that are available to most companies that are at the stage that we are. As I've described, globally, there is consolidation already starting to take place among platforms overseas. That there are other organizations, large, financial institutions and the like that, could be potential acquirers of Birchal in the future. So, M&A trade sale type activity, could be one path. A listing also could be, another way to achieve liquidity for us. And it's something that, I suppose is, acceptable to us. We're a regulated business, so, complying with the regulations and the compliance burden that is involved with being a listed business, we don't see as being too much of a deterrent for us. And then the third one is, and this is probably a bit novel, but a big part of what we're working on is building out an ecosystem of products and services to support startups and SMEs as an asset class. And, we've spent some time talking about secondary trading and liquidity. We've described our first initiative, but, as we're doing with hosting our own crowdsourced funding offer and potentially being the first pilot for Virtual Trade, we might use, some of our own services in the future for liquidity. That's kind of not out of the question either. So, but, where I sit today, lots of opportunities. Which one is right? It will always depend on the circumstances and what's in the best interest of the company at the time. In terms of the funds raised under this offer, I'll note that we're profitable, we're generating free cash. So, we can do a lot of the things that we want to do. Raising capital will enable us to move faster. And that is kind of building out our team and making sure that we've got, scale efficiency for our core service offering, but also have enough time and resources to focus on and accelerate building out the other products and services that we feel the market is demanding of us. It's important to note, the industry is growing 70% compounded. If that continues over the next few years, the kind of business that we're going to need to be and the kinds of products and services that companies and investors will require in that environment will be different. And we feel that we're in the best position to kind of respond to these market needs. So that's really what the funding will help us achieve. But more broadly, we're a community-based business. We help companies build communities. This is a really exciting opportunity to invite our community into Birchal as investors. And we feel it'll make it a stronger business and a longer lasting business. And that includes, big investors and smaller investors, and the discussions so far in this process have been, truly phenomenal. And in terms of just building awareness for what we do, the regime, but also Birchal, that's been an amazing opportunity as well. Blown away by the amount of people that we come across that are active in the financial industry and investment that really don't have a good understanding of what we do and the benefits of what we do. But exciting at the same time, because it just shows us the scale of the opportunity and perhaps that we haven't really scratched the surface yet.
Yeah, most definitely. And Michael here has asked the question, just want to ensure the CSF shares don't have to be offered back to founders.
Like in terms of a buyback?
Correct, yeah.
No, they will not.
I knew the answer, but I absolutely just wanted to hear it from you. But yeah, no, it's one thing to add as well, just in regards to that, the timeline that we currently have is closing the expression of interest campaign on the 11th of April, looking to open the investment offer on the 12th. If you have expressed interest to invest, and I'm sure almost everybody here has, then you will be, receiving comms and receiving an early investor link to be able to access the investment offer, go ahead and invest, or go ahead and check out the investment, the offer document rather, and the other associated investment documents. There's still a few more questions, Matt, so we're going to do our very best to get through these and make sure that everybody's questions are answered. So Thomas here has asked a question about our vetting process, which is essentially our gatekeeper process. So how big is the vetting team for new listings, performative business practices without substance, greenwashing, etc. Virtual signaling creates integrity and transparency issues. Totally agree. How can you ensure that listings are telling customers and virtual the truth?
Look, it's a great question. Talking about our legal and compliance team. Kelly Morton, who's our Chief Legal Officer and also a director, really experienced and amazing lawyer who I'm absolutely delighted to work with. Kelly has experience working in multiple jurisdictions. She was a partner in an Australian law firm. She also worked in New York and in London. We're really kind of privileged to have her on the team. Eliza Ryan, who's also a legal counsel, a really great lawyer and brings with her a lot of financial services experience. And then myself and Adam Vise. Adam's our chair, so Adam and I are co-signatories on our gatekeeper process. So Eliza and Kelly kind of work with the businesses and kind of help them through the gatekeeper process. And then our final gatekeeper meeting is when Adam and I kind of interview the companies after we've reviewed the offer document. And, I don't want to say interrogate. We don't interrogate businesses, but we interrogate the issues, I suppose, and just make sure that the offer is kind of presented in a compliant and engaging way, but also provide some commercial feedback too. In terms of protecting companies against how can I say this, like dishonest conduct? The directors that are preparing these offer documents take on personal liability, and they sign declarations before the offer is published that everything in the document is true and correct, and that they're otherwise reconfirming that they're eligible and that it's an eligible offer to be made. While we're reviewing documents, if on an objective basis we don't feel that there is a reasonable basis for something to be said, that really is flushed out through the gatekeeper process. The reality is we can't cover for everything, but there are enough safeguards under the Act and in our process to, I suppose, support that by and large, most of these companies are saying the right things, and it's kind of hard for them to, be misleading, I suppose, on an objective sense. The other really useful mechanisms through the regime is the discussion facility, and I would argue the expression of interest process as well. I can't talk about publicly, but I can refer in number to multiple occasions where interested and concerned investors or members of the public have contacted us and said, there is something about this company that you're running an expression of interest for that I feel you should know. And that is really helpful because that helps us do our job. And we, kind of will raise these issues if we're able to with the company and really run these issues to ground to get comfortable that, people are of good fame and character and the offer is presented, fairly and accurately. And similarly, through the communication facility where an offer is live, that is another mechanism for people. So, to raise things or bring things to the attention of us as the intermediary. We use that, and it's a feature that is doing its job.
Yeah, absolutely. And a question here, how many of the 136 successful raises have gone onto public list on the ASX? Just one so far. How is Birchall's shareholder equity converted when this happens? So how is the Birchall shareholder, so the typical investor in that round, converted?
I think so. With Activated Nutrients, I think they undertook a share split before they listed on the ASX. The registry service kind of notified me of the meetings and all of the things that shareholders needed to be. So I'm speaking as an investor in that company. So I kind of had visibility of this, and then my holdings now are issuer sponsored through the online registry service. So I could trade them tomorrow if I wanted to, by getting a broker and kind of giving them my HIN, my holder identification number.
Yeah, easy. Fantastic. And Scott here has asked a really, really great question around how the secondary market situation has progressed in the UK and US over the years. Obviously, if you've watched this, Matt, I know you've done a lot more digging on this over those different regions.
Yeah, look, I mean, Cedars has in the UK has a fairly active secondary market. I mean, like you would expect, it took a while to heat up, but it seems to be like a pretty kind of regular a facility that has regular trading activity, and that seems to be increasing. I believe Crowdcube has introduced something similar. I think they've got a data deal with Crunchbase as well. So, people can actually make requests to buy stock in companies that...
CubeX.
Yeah, CubeX that, hasn't... So, a couple of really great initiatives. I'd say that the regulatory landscape in the UK is vastly different to Australia's. And similarly in the States, Start Engine has a secondary trading business as well. They've started these things, but they're in the early stages. I think Australia and what we're doing is we're less than early. We haven't started yet, but we're going to soon. So it'll kind of take a while. But we have a really good understanding of the regulatory landscape here in Australia. So obviously have some ideas about what version 2, 3 and 4 might look like in this space, and where we could take this. And I think also the way that the market is structured in Australia presents, I suppose, or supports a more optimistic outlook for some really compelling services in this space.
Yeah, no, absolutely. And Birchall Trade, will owners, founders, if they're a retail investor, be able to exit some of their shares on this platform, or is that only for investors from the CSF raise?
Look, just to be absolutely clear, Birchall Trade is a service that Birchall provides to a company that chooses to provide it to its shareholders. So it is not a generalized marketplace. It is a technology solution for a company to operate a low volume market. So the company, if you're an investor in a company on Birchall, it is the company will have to choose to do this. And the way, it all relates to, it can't work unless there is demand for stock. So, 100%. A company might release an annual report or some other quarterly performance announcement and not be raising capital. But if people have missed out on a previous opportunity to invest or otherwise interested in investing in the business, the company is providing this facility to capture that interest or that demand for the stock, and then offering that opportunity to shareholders, whether they be crowdsourced funded shareholders or existing shareholders, to sell their stock into that demand. Essentially, that's the way that we see it working, and kind of explains why we've had some challenges in identifying a pilot, because the conditions need to be right. So
yeah, absolutely. Michael, I love your question here. Do you have a framework, workshops, referrals to partners to prepare SMEs for a potential investment offering? How would this differ, if at all, from a typical investment pitch deck? I think if we didn't have COVID, we would have absolutely done one of these in person to be able to provide people with a lot more of an understanding as to how they can prepare their crowdsource funding campaign and what they can put together for it. Companies would find that it's very, very different from a typical investment pitch deck, purely because we actually instruct companies not to put together a pitch deck as such, but a company profile and then an offer document. So our process of preparing a company to have a successful crowdsource funding raise is really all about making sure that their messaging is right, making sure that their narrative is very clear as a company, of course, making sure that they've satisfied our criteria prior to doing that. But we need to make sure that the company actually communicates what it's doing very effectively, because this is a skill set that a lot of companies need to be able to practice and preach before they go through a crowdsource funding raise, and then we can get very in detail and in depth on the marketing of the raise itself and how that data can reflect those marketing efforts. So yeah, it's something we'd absolutely look to do, and I'm sure we will be doing it in the future. Next question. So investor stakeholder reporting, will Birchal be charging companies who raised to use this service, or will it be free after a successful raise?
That's a great idea. We haven't landed on either of those things yet. I think with anything, the early users, will be asking them for a lot of help and input in giving us feedback on how we build this. So yeah, we probably should be offering it to them for free for a period of time as a demonstration of gratitude. But I think ultimately we expect that this will be offered on a software as a service model. But that's something that we'll work out once we get through our alpha and beta releases.
Yeah, absolutely. And Thomas here has asked, why doesn't Birchal require new listings to post their account sheets? So the offer document does require the last year of financial accounts, but Matt, I'll let you elaborate on that point.
Yeah, it's a requirement of the legislation that a company include their financial statements. So the requirement is the most recently completed financial year. But if you're opening an offer in mid-June, that means that the minimum requirement is your financial statement. If it was June this year, your minimum requirements would be your financial statements from 30 June 2021, which is nearly 12 months late. So what we expect as the intermediary, and as you'll see with offers that are open around that time, is that companies update with management accounts to a sensible period, depending on what time of the year that they're in. And why is that a requirement? Well, because the overarching requirement for any offer document is that the information is clear, concise, and effective. And it needs to be effective in the sense that it gives an investor enough information to be able to make a decision to invest or not. So notwithstanding that the minimum content requirements are the most recently completed financial year, we would argue that it will always require an update, whether that's by management accounts or at least a sufficient clarity in a narrative form as to how the company has traded post the financial statements up to the date of the offer document, or a sensible period around then.
Yeah, absolutely. And most companies do choose to include a little bit more data, but it's part of the CSF regime to just include those last financial year of accounts. Another question here, is there a minimum shareholder engagement requirement? For example, any company that has completed a CSF will need to provide quarterly or half yearly reports to all shareholders and organize a yearly AGM. This is a question which we filter through when we're having initial conversations with companies all the time.
Yeah, look, I mean, for proprietary limited companies, there's no requirement to hold an AGM. historically for public companies that converted to use crowdfunding in the early days, that was one of the specific exemptions, was that, these unlisted public companies that crowdfunded did not need to hold an AGM. Other than that, the burden, I think we would argue the burden is pretty low on companies that have completed a crowdsourced funded offer. They need to prepare an annual report. Unless they otherwise need to be audited, they don't need to be audited until a company raises more than $3 million through crowdsourced funding. And that report needs to be lodged in most cases by 31 October every year. And the annual report is the financial statements and a director's report, which is kind of the commentary to how the company has performed in that year. My view, the view of our company is that's not enough. So, we ask or require that companies will at least update investors twice yearly. I think, my view is that they need to do more than that, at least if it's reporting informally on a more regular basis. Now, companies need to figure out what is right for them and for their shareholders. Some might like to report monthly. We report quarterly to our shareholders, and we'll probably continue that once we've completed. If and when we complete our crowdsourced funded offer, we'll report quarterly. We'll be using our investor reporting tool. But companies need to choose a cadence and stick to that, and manage expectations appropriately with their shareholders. But I would argue, and this is the view held by a business, that the annual report is probably not enough. It's enough in terms of a formal report, but informal reporting, at least on a quarterly or monthly, or in some cases half yearly basis. But if the company's pursuing an aggressive growth agenda and things are changing pretty quickly in the business, they should be seeking feedback and sharing information with investors more regularly. And I think if this is made easier for companies, they will take this up, because in our experience and what we've observed is shareholders that get involved with these companies, they're passionate about them. They genuinely want to help. And, founders tell us all the time, someone that's invested in my business through a crowdfunding offer has just been amazing. They've been an advisor, or they've helped me land this, this contract, or, any number of things over and above the capital that people now involved in your business can help with. A regular opportunity to kind of encourage and ask for assistance can only be a good thing.
Yep, definitely. And I can see the question here. What is the Birchal pre-money valuation for the CSF raise? I'm conscious as well. They've got a couple below asking this question.
Yeah, look, we're not disclosing this publicly at the moment. We're kind of, in the same way that a lot of companies do. We've got a view, and that view we're testing with some investors that have identified themselves through the EOI process, and others that we've been speaking to that are in our networks or our extended networks. So we're kind of taking this process of price discovery very seriously. Like we've obviously got a view, but it's we need to kind of be responsible in that view, and we want to make sure that the offer that we go live with will be supported. But suffice to say, everyone will get the same deal. So, these investors that we're having robust discussions with about valuation at the moment, they're doing the work for everyone that invests in the offer.
Yeah, awesome. And Aaron here, your question around data is definitely one for me. I'll answer this. What is the percentage of investors and capital that expressed interest that actually did end up committing to a raise? I would say in our environment and in our business, we have constantly been trying our best to refine this. We can never get an exact measurement of it. We have found that it's between 36 to 52% of the amount that's actually expressed interest to invest comes in historically, but there are outliers who fall outside of that bracket. That's what we've found as an average to be our sort of base level for our, what we consider a ballpark range that is given to a company. But that data is constantly refined, and every single offer is different, and every single offer has different individuals who come into it. So that figure is very much so that ballpark, and it's our dominant average that we see at the moment, and it's something which we can see further into the future needs to be continuously refined, and we're working on a number of different tech integrations to further refine that, to make it as bespoke and accurate as possible. Just moving further down here, and I know we've covered a couple of questions on legislation. What are the primary legislations Birchal operates under? You mentioned compliance with ASIC regulations. Would be good to know the specific acts.
Yes, so as a financial services licensee and an intermediary authorised to host crowdsourced funding offers, the key pieces of legislation that we're subject to is the Corporations Act, and as a licensee, the ASIC Act as well.
Yep. That's it. And anonymous question here. How do we know if the funds raised is used for the purposes that are stated in the crowdsourced funding raise?
Yes, so I mean, a company needs to articulate the use of funds in the offer document, and the expectation is that that is right at the time that they're making the offer. As things progress, a company and the directors need to do or act in the best interest of the company, and circumstances change from, sometimes. We have had a couple of situations where a company's kind of raised money and, something has been articulated as part of their use of funds. And then for whatever reason, the thing, didn't transpire to be a good idea anymore. So the directors acting properly and in the best interest of the company with the information that was available at the time and changed their plans. That does happen from time to time. So it's really, it depends on the company and it depends on their trading conditions, and really the directors kind of making sure that they're, making decisions that are in the best interests of the company. But like in a hypothetical sense, if the strategy that you've kind of advanced to investors and set out that you needed the funding for, transpires that with more information, that's not the right strategy. It's, I think you could argue that a company acting or a director acting properly, is entitled to change those plans.
Yeah.
What I would say though, the caveat to that is, and this is, part of the benefit, but also the obligation and the responsibility with raising funds in this way is, if a company has, raised capital, with a narrative and a message, that, they are executing, raising capital and inviting the opportunity for people to invest, for them to execute one plan, and then the plan that they ultimately execute is different or, materially different to that, they probably should test with investors, or give them, I suppose, the opportunity to opine on the change in strategy. And again, I think this is probably something that can be resolved with keeping investors updated regularly, so they have all of the information, or as much of the information the company is possible to share, so they have some insight on the sometimes difficult decisions that the boards need to make.
Yeah, absolutely. And Michael here has asked a question. So you're using the Birchal shares as the pilot and beta for the low volume market. What are the criteria for a low volume market and exchange?
Yeah, so a low volume market is a financial market where the operator can operate it without the need for a markets license, provided that the market doesn't facilitate more than 100 transactions and more than $1.5 million in aggregate within a 12-month period. That's it in summary. There are some additional kind of disclosure requirements acknowledging that it's not a regulated market, and therefore the usual principles that people would expect of information and listing rules and all of the other things that come with a participant in a regulated market aren't there. So people need to accept those risks by participating in a low volume market. our decision to kind of pilot this out ourselves if we can, and if the opportunity presents itself, is partly so we can show people like how this would work and what this looks like, but also kind of show regulators and government and others like how this can be done.
Yeah, definitely. And besides the secondary trading platform, do you have any envisaged exit strategies for investors to realize their investment in Birchal in the future? I feel like we touched on exit strategy and what we were looking to do a bit more earlier, but if there's anything else that you wanted to touch on there, Matt, over to you.
Oh, look, I mean, any way that we can help companies achieve an exit, if that's what they want to do and if that makes sense to them, we're here, we're ready, willing, and able to do it. And that might involve, over time, if we've kind of augmented our team and, onboarded some team members with capability in, M&A, corporate advisory, and these types of things, because not every company's exit strategy is going to be, to list on a market or do other things. Some companies, you would expect that they might be acquired by a larger company, particularly some of the food and beverage businesses. Like they just might be kind of incorporated into a larger like food and beverage conglomerates. So any way that we can help companies like achieve their objectives, if that's what they want to achieve with an exit, we're here and ready, willing, and able to do it. And if they become additional products and services, they're things that we're always kind of looking at, ways that we can systemize and kind of scale our impact.
100%. 100%. And Paul here has asked what share registry provider we will be looking to use. Over to you, Matt.
We're currently using Cake.
Yeah.
And I think we're going to stick with them. And it's a tough one because obviously we see lots of registry services. We work with all of them and they're all great. And we haven't kind of chosen, like one over the other or kind of recommend one over the other. But factually, we've chosen to use Cake so far, and we I suppose we'll just be continuing to use them because they, like all the others, provide really good service to companies that we've hosted on the platform.
Yeah, absolutely. And Jared, your question here is definitely one that I would love to cover. So how many prospective companies are knocked back before they get any raising stage on the platform? So it's important, as we've already distinguished the difference between the eligibility requirements and then the sort of the Birchal criteria requirements. If we consider all factors at play here, it's probably over 90% of companies that actually come through and submit an application that don't proceed purely because they're either not eligible or we deem them to be a little bit too early stage. We want to make sure that those companies which are too early stage are provided with guidance, and we can tell them, hey, you're a little bit early stage at this point in time, but if you do X, Y, and Z, we'd love to have a chat and then reassess your business to really understand if it fits into that criteria and if we can work together in the future. What we are really interested in doing is purely just making sure that even those companies which we do deem to be a little bit too early stage, that they understand what a fundamentally successful equity crowdfunding campaign looks like. And even if they have been knocked back by us because we believe that maybe in the way that they're growing their business, it's not going to be too community focused, and it would be very difficult for them to see a successful raise and then go on to do the raise. They go on and have chats with other people and say, well, hey, if you're community focused and you're building your business this way, why don't you consider an equity crowdfunding campaign? But yeah, to answer that specific part of your question, it's over 90% of all applications that come through that we probably do push back on. Yeah, we don't immediately take any clients on. And that is the end of all the questions. And I cannot believe it's taken us over 2 hours to get here. I just want to thank everyone who's attended and really stuck with us till the very, very end. I cannot express how really amazing this process has been, to receive so many incredible messages and see just how many people are passionate about really Birchal and what we've been able to achieve and what we're looking to achieve in the future. So thank you very much, Matt. I'm going to hand over to you to sign off and say your final words.
Yep, thanks everyone for your continued support of Birchal and your interest in our raise. What we do would not be possible, obviously, without the companies that trust us and the investors that back businesses that they believe in. So we can't say enough like how much we're grateful for your support. We take our role very seriously. We're excited by the future, not only for equity crowdfunding, but the future for Australia. We will live up to that responsibility, and we thank you for trusting us and supporting us.
Yeah. Oh, thank you everyone who stayed right until the very end. We cannot wait to keep you informed and hope to see you in the investment offer. Thanks very much, everyone. Take care. Bye-bye.
Thank you.